This conference will now be recorded.
Hi, everybody. My name is John Siegman, and I am the head of trading and research for Varea LLC. We are a tech firm that has produced a family of algorithmic trading products based on our revolutionary intellectual property. And I'd like to introduce one of them to you today called signal menus. First, while we look at this disclaimer, I'll tell you a little bit about my background. I spent 20 years at the Chicago Board of Trade and Mercantile Exchange, some of that time in grains and S&Ps, but most of my career in the Treasury futures pits at the CBOT. I went out on my own shortly after 9/11 and have spent the past 20 years plus publishing daily newsletters for commodity and index futures traders. I created a unique charting program called Macrograph. I also conduct daily trading classes on market fundamentals and technicals. Also, I spend most of my time now developing automated trade strategies with the team here at Algo Returns. So the system I want to talk about today is called, from our signal menu, is called Trident. It is a breakout strategy. There are both buy and sell signals. In the premium package here, you will see where to get in, where to get out. The risk is defined. Our profit projections are set. And we also have methods of showing how to protect those profits as the market moves in your favor. So here's the example we want to go with. This is what you would get in an email every evening. You can see that we have a number of different markets on here. You see on the what's 1, 2, 3, 4, 5, the fifth column here, we have the description. We're looking at many commodities, but our futures markets, we got treasuries, equities, precious metals, energies, foreign exchange, grains, livestock, and even the softs like coffee, cocoa, cotton, things like that. When you get this, all you have to do is look at the rule status column, and you'll find out which of the trades is active. If you see it shaded in yellow, the word active up there, what it means is that the market is likely to move in an above average fashion directionally, a vertical move, either up or down. We're not sensitive to that, but we are looking for an above average vertical move, or at least an average move, let's say an average day range, possibly more. And that comes up in the next column where we have average day range. These are kind of goals that we like to have, right? Average day range and ADR. And then we also have average week ranges when it really pays off. We can actually, we shoot to make an average week's range. Underneath that sheet, you'll get the directions for how to make the trade. And I want to concentrate on a soybean trade we got just recently here. And let me explain a little bit what's going on here. First of all, you can see the symbol, then the strategy we have. There's a long position. If the market breaches this level here at 1332.75, we're going to get long soybeans, and we're going to get short if it happens to breach 1375.50. We have a profit target here of about 8 points, and we have a risk of about 15. And we also have a trailing stop. We can talk about that later. These are all subjective. You can do whatever you like, but these are suggested parameters for making this trade and managing this trade. Also, you have a slice score and a range score. A slice score, any ranking of A or B in either one of these columns, and you can see that there's an explanation of what they are down here. Any A or B ranking usually means you have a pretty good chance of a good vertical move. And again, either up or down. We're not sensitive there. So I normally will focus on the A's and B's. Doesn't mean the C's don't work. It's just that the A's and B's tend to work or get the bigger moves. We also like to trade more than one contract at a time. We like to do two. And we actually have a name for them called the workhorse and the racehorse, and I'll show you how those work in a moment. But let's talk about this soybean setup. I'm going to walk you through a trade that we recently did and show you how we managed it. So let's do that. Here you go. What I have here is a 30-minute bar chart of soybeans. And I've sectioned off each day during regular trading hours. So you can see these rectangles that are shaded yellow cover regular trading hours, meaning it opens up at 8:30 in the morning Central Time, 9:30 Eastern, when the market reopens. There is some overnight trading, certainly during the Asian hours, and then again during European hours. But generally, we do focus our trades on day trading because that's when volume is peaking, liquidity is at its highest. Thus, the long-term or institutional traders are more likely to be involved. When they're involved, that's who moves markets. So we're really trying to capture when the big money is in there. We're really tracking capital flows. With the moves that happen during regular trading hours tend to be more powerful because they've got the volume behind it. That's the logic there. Anyway, so in the sheet here, we said, okay, hey, we're going to buy it if it gets above this level right here at 130.33. I'm sorry, 13.32 and 3/4, or we're going to sell it if it gets to 13.17 and a half. And obviously, on the day here that we did get the signal, which is right here, it was a buy signal to get long. And you can put buy stops in to get long. And by the way, you can trade these anytime after midnight. We prefer to trade them in the mornings, but you can trade them anytime after midnight, 2 o'clock in the morning. You choose whenever you're comfortable trading. But generally, I mean, myself, I like to get a good night's sleep. So generally, I like to play in the mornings best. But nonetheless, so you can see that on this was a Monday morning. This was a Wednesday, Thursday, Friday. On a Monday morning, the market broke above our barrier here, telling us to get long. We have what we call a workhorse, which is our first target. Our workhorse is a smaller target, but what we're trying to do is mitigate risk as quickly as possible and put a little bit of money in our pocket. So what happened in this situation is we do a workhorse and a racehorse. So in this instance, our workhorse made us about 450 bucks, right? So when we get to that, our first objective, the target one, we take one of those off. We take the workhorse off and we let the racehorse run. So we're doing two contracts here. And as soon as we hit the workhorse objective, we take the risk, which was down here, and we throw it right and we split it in half. So now if the market reverses, we come back and we scratch the trade because what we made, the 400 and roughly 50 bucks that we made here, we would have given up if it came back and took us out. In fact, if the market did not trend, then we still have a zero on the trade or scratch on the trade. We didn't lose anything, but maybe a few commission dollars. Now, what I like to do is, so this is the level, this is an average day range here, this brace that I'm showing you. Let me make this just a little bit bigger for you. There you go. So you can see that the racehorse here is the length of it, or this is this bracer is the length of an average day range. So what I like to do is go, hey, when the market reaches 50% of an average day range, right? I'm going to take this risk and I'm going to put it to cost. So now, if the market reverses on me, I still make my 450 bucks and I'm still in the trade. So I've got money in here. So now I'm playing for free, which is really the ideal situation here. We were able to hold a potential trend trade, and we're already making money. So now I've got the racehorse trading there. So now, if the market goes up to my next target, the racehorse is running here, right? Let this racehorse run. When the racehorse is running and it goes to my next target, which is the length of an average day range, now I'm going to take my risk and move it to here. What did I just do? Well, I've made my 450 bucks there, or roughly that. And now I bring my stop up to there, and what did I do? I've got another $1,000 in my pocket. So I've got about $1,450 in my pocket, and I'm still in this trade. When the market reaches this target, what I like to do then is trail my stop from any new high, right? So this was the day we reached the racehorse number right here, or an average day range, right? So from now on, any new high that I make, I will trail the stop by 50% of a day range. So here I'm locking in more money. Then as the time passes, now we go to the next day, really no change. Then the next day, holy cow, market's right there. I move my stop. Oops. I move my stop to here. And you can see on this Friday afternoon, the market came in and closed and stopped us out. Well, what happened in effect was we went from making, well, we made our original $450. And then on the racehorse, we added another about 2,800 bucks. So the idea here is to make a little bit of money, put a couple chips in our pocket, and see if this horse will run. We don't know if the market is going to trend, but we suspect that it will because the odds are favoring an above average vertical move. So this is what Trident is all about. Get on that workhorse, get some work done, make a little bit of money, and see if we can get the racehorse to run for us for a few days or even longer. Ultimately, I think what I'm really looking for is an average week range. That doesn't happen a lot, but hey, we have lofty goals here at Algo Returns, and it does happen. And so this is why we have these management techniques of trailing stops to see how much we can squeeze out of a trend without giving up too much if the market reverses against us. Okay, so there's a couple other products that we have here. We absolutely do some investment management. We develop proprietary signals and systems for institutional traders, CTAs, HFs. We do some consulting and licensing of products and IP and technology. We have the signal menus, that I just showed you. We have a premium version and just a regular version that you can, you just do whatever you want with it. We'll just tell you when the likelihood of a market moving in a violent manner is likely. So you can manage it any way you like. We also have full systems where we'll do the work for us. You just tell us, hey, I'm going to open up an account at this place. We'll have a broker execute the trades for you, and you just watch your money grow. And then lastly, these are some of the things that I learned over my years in the exchanges, a good 30 plus years in this business. But I did develop a brand called Macrograph, and it's a unique charting system that you can build your own charts, graphs, and there's some data involved in that for research. There's also on the website macrograph.com. There's some educational videos. You can see how all this stuff originated, and there's tutorials, all kinds of neat stuff out there. So please, we'd like to offer you a free trial of our Varea premium version, like Trident. And all you have to do is go and visit our website at algoreturns.com, and we'll get back to you. Hope to see you soon. Thanks for coming.